The last video I published on asymmetric investing was my top stock to buy in November 2025. That stock was On Holding, and the stock was up 20% today after the company reported earnings. Just another phenomenal earnings report from On Holding. The company's hitting on all cylinders. Really, the story here is they have a ton of pricing power and they have a ton of demand for their products. So their margins are up, the revenue is up. Now, the big thing is you have to understand how currencies impact this company. You need to look at the constant currency growth numbers and not just the headline growth numbers, because they're reporting in Swiss francs. So especially if you're a US investor, it's really important to look at how the value of the US dollar impacts this company. It's a little bit of a strange company to follow, but just phenomenal results. And it is still a very cheap stock. Shares are down about 20% so far this year. I think a ton of potential ahead for On Holding, but let's dig into why this quarter was so great for them. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you want more from me, check out my newsletter, Asymmetric Investing. There's a link on screen and a link in the show notes. That's where I'm building my asymmetric portfolio. Buy stocks once a month. One of the stocks that I bought this month for November is On Holding. It's actually the biggest allocation that I had for this month. So that has gone really well, but this is now one of the top holdings, not only there, but also on autopilot. If you're interested in following that portfolio on autopilot, there's a link in the show notes as well. So two great ways to follow more of what I'm doing with my real money, and then also follow that portfolio if you want to on autopilot. Just a phenomenal new platform. But let's dig into the results from On Holding. This is the quarterly report. You can see here, the headline numbers are what you're going to see here at the top. So 24.9% year-over-year growth rate. That is reporting in Swiss francs. Now, the reason their reporting is so important to understand is because they're reporting their numbers in Swiss francs, but most of their sales are still in the US. So a $100 sale in the US a year ago would have been an $88 Swiss franc sale. That same $100 sale today is worth 80 Swiss francs. So the declining dollar and the relative strength of the Swiss franc is making the company's sales in the US look weaker than they looked a year ago. Doesn't mean that they are actually weaker, especially if you're a US investor and you're US centric with the US dollar kind of at your core of your investments. But that's the way that their reporting looks. So when you go to their results, this is why you can have such a huge difference, 24.9% increase in their sales based on Swiss francs, but a 34.5% increase based on constant currencies. So that's they're using the same exchange rate from a year ago and saying this is what the growth rate would have been had there been no changes in the currency. Now there's going to be two places that this impacts On Holding in particular. The first is going to be on the revenue line. The second is actually going to be on the income statement. They're going to record a gain or a loss each quarter, depending on whether their US dollar holdings get more or less valuable through that Swiss franc lens. Now, the reason that this is not going to be such a big number, 6.1 million Swiss franc loss in the quarter, the reason that's not bigger is because all of these losses were recorded earlier. So the sales that we're having in the third quarter are being compared to a year ago quarter. But you can see here, the Swiss franc has not really changed all that much in value over the past few months. So that's why you're going to see a big loss for the 9 months ending September 30th, but a relatively small loss in the 3 months ending September 30th. So hopefully that's helpful in kind of understanding these numbers as we go through them. Most of what I'm going to talk about is in constant currencies, because I think that's the most important way to look at the company. Now, they break their sales into a number of different areas that sort of tells you where the business is going. Direct-to-consumer channel increased 27% or 37.5% on a constant currency basis. So that means they're actually growing faster in direct-to-consumer. That's a channel that they actually own. It's good. You want to see a company grow in there. You also want to see them growing in wholesale, because that's where they're going to be competing more directly with other big brands like Nike, like Hoka, which is owned by Deckers Outdoor. But the good that they're growing in that DTC segment, because again, that's where they're going to actually own that customer and that pricing a little bit more. Wholesale channel, 32.5% on a constant currency basis. Now, net sales by region is really interesting, because what you can see here is EMEA growing 33%, Europe, Middle East, and Africa. America is growing 21%. That's a solid number, but not all that impressive. But it is, like I said, their biggest market by far. But look at this, Asia Pacific growing 109.2%. Now they give the scale of these sales right up here. So you can see on a Swiss francs, 436.2 million in the Americas, and Asia Pacific is now up to 149 million Swiss francs. So it's not quite of the same scale, but it is still a really big business and a big business to be growing 100% year over year. The other thing, and I've highlighted this on previous videos, a ton of upside in particularly apparel. That's growing at 100%, accessories growing 160.8%, shoes still growing at a phenomenal rate at 30.4%. With any consumer good company like this, you also want to keep an eye on gross margin. This is where their gross margin becomes so important. They have said that they wanted to have a 60% gross margin. Well, guess what? They reported a 65.7% gross margin. They said that there were some one-time things that helped this a little bit. It was a 200 basis point impact from lower shipping costs. So that's maybe something that's not going to be ongoing, but still, you're going to be above that 60% gross margin number. That's exactly what you want to see from On Holding. And obviously, net income margin increased to 15%. That is phenomenal because they are growing this quickly and they're growing profitably. Very difficult to grow a company like this profitably because you have to spend ahead of sales on things like sales and marketing, on product development, on inventory, on manufacturing. So all of those expenses are being accounted for. They're not really optimizing for profitability yet they're reporting huge profits right now. Also a really solid balance sheet. Net cash and equivalents, almost 1 billion Swiss francs. So about $800 million in US dollar terms. The other thing we also want to look at is outlook. How are they performing compared to their outlook? Because they did increase their outlook last quarter. Net sales are now expected to grow 34% year over year on a constant currency basis this year. Previously, they had expected 31%. They gave guidance about 2 years ago that they expected to double the business over the next 3 years. That's an implied growth rate of 26% per year. They're now executing at 33%. So exceeding those really high expectations that they set a couple of years ago. A 34% constant currency growth rate is absolutely phenomenal, and they're expecting their margins to be well above their long-term goal of 60% at 62.5%. EBITDA margin expected to be above 18%. So again, really profitable company. I really have a hard time finding a lot of flaws in On's results. And this is where I think there's such a huge opportunity for the stock. I'm going to check this out with Fiscal AI. They actually don't have the most recent quarterly numbers. So these are going to actually overstate the company's valuation, but enterprise value to sales, 3.2. So growing in excess of 30%, and the enterprise value to sales is just 3.2. Price to free cash flow, 26. That's also going to come down as the Q3 numbers start coming in. Forward price earnings multiple, 25. These are pretty reasonable multiples for a company that's growing double digits, much less a company that's growing in excess of 30%. So this is why it was one of my top stocks coming into November. Shares are up about 17.6%. I certainly would be looking to add to that position at any point if we see any weakness over the next few weeks or the next few months. Sometimes the market just throws phenomenal companies out with the bathwater, but you can see here, On Holding, long-term trajectory, doing really well, up about 125% over the past 2 years or so. But like I said, that valuation just not keeping up with the performance of the company. So I think there's still a lot of runway for On Holding ahead. Let me know if this is a stock that you own in the comment section below, what you thought of the quarter. And like I said, if you're interested in everything that I'm buying each month, check out Asymmetric Investing. There's a link on the screen and a link in the show notes. Love to have you as part of that community. Thanks for watching, everybody. See you here next time.